Hello everyone, welcome back to our IGCSE Accounting series for May-June 2024 examination. Today we are going to look at question number 2 from component 22, which is based on the manufacturing account. In this class, you will understand the meaning of manufacturing account, and secondly, you will learn the format of manufacturing account, and third, we are going to check each key adjustment required. Okay, so let's get started. Yeah, this topic is related to manufacturing account. Okay, so first question here, what is manufacturing account? Okay, manufacturing account is part of the annual financial statement and is used to calculate the cost of goods produced. Okay, then what are the element of cost? That is important. Okay, there are four mainly. First one will be direct material. So cost of the material used during the period and include the purchase price of raw materials and the acquisition cost related to the purchase. Example, purchase of raw material, carriage inward, freight charges on raw material. Okay, so direct material including all these points. And after direct material, direct expenses, right? These are any other expenses which a manufacturer can directly link with the product being manufactured. Example, royalty fee paid by the manufacturer for every item produced to the person who originally invented the product. You know the royalties, right? So it will come under direct expenses. Then direct labor. So wages paid to the people who are directly involved in the manufacturing process, like direct labor, direct wages, factory wages, production wages or manufacturing wages. Then last one is factory overheads. These are the sometimes we have to call like indirect factory expenses also. Okay, factory overhead or indirect factory expenses. They include all the costs involved in the operating factory which cannot directly link with the product being manufactured. Example, factory rent and rates, depreciation of factory machinery, indirect factory wages. Okay, so this is factory overheads. Then, and very important and vital part in the manufacturing account is prime cost. It is the cost of the essential necessary for production. Prime cost, the formula will be direct expenses plus direct labor plus direct material. If you add these three, you will get the prime cost. Then what is meaning of cost of production? Cost of production, it is the total cost of manufacturing the goods completed. So for that formula is prime cost plus factory overhead. That is called cost of production. Then next is work in progress. Work in progress, it is the goods which are partly completed at the end of financial year. Okay. Then if any unit cost calculation. Okay, this question there is a unit cost. So I will explain it the time with the question. Here, how you are going to calculate the unit cost. Unit cost is very simple. After getting the cost of production divided by number of units produced, you will get the unit cost. Okay, so let's move to the format. Yeah, yeah. This is the manufacturing account format. So first will be the direct material will come. Okay, so in this, remember manufacturing account and income statement, the format completely different. You know very well. So manufacturing account, why we are preparing manufacturing account? To find out what is the cost of the production. For producing any product, we want to know how much cost incurred. So here only raw materials we will consider. Finished goods we will record in the income statement. Okay. So raw materials, everything we have to record here. First one is opening inventory of raw materials. Then any purchases of raw materials we have to add. Then carriage inward also we have to add. Is there any purchase return? We have to minus. Then closing inventory also we will minus. Then we will get the cost of raw material consumed. Okay. Then from this amount, direct labor we are going to add it, and direct expenses also we are going to add it. Then we will get the prime cost. From the prime cost, factory overhead we have to add it, all the factory overheads, indirect wages, indirect expenses, factory rent and rates, and depreciation of plant and equipment. Okay. Then the total we have to add to the prime cost. Then we will get one figure. That figure, very important, opening work in progress, you have to plus it. Closing work in progress, if you minus, you will get the cost of production. This is manufacturing account format. Okay. Then in manufacturing account, income statement, how we are going to do. Okay. Trading section. So revenue of finished goods. See here, completed goods. That is means finished goods. Okay. Sales return. If there is any sales return, we will minus. We will get the net sales. From that, opening inventory, we will add opening inventory of finished goods. Okay, remember finished goods only we will write in the income statement. Then plus cost of production. Okay, this is the biggest change in the manufacturing account and the sole trader income statement. So sole trader income statement we will not write cost of production, but manufacturing account cost of production you must add to the opening inventory. Then is there any purchase of finished goods? This is also we have to add it. Then any goods drawing, right? Goods drawing we have to minus. Then closing inventory also we will minus. Then we will get the cost of sales. Revenue minus cost of sales. We will get gross profit or gross loss. Okay. So this is income statement up to gross profit section. Okay. Then and one more biggest change in the statement of financial position under current asset. Normally sole trader current asset, yeah, inventory we will take only closing inventory, right? Closing inventory of finished goods, right? But here we have to add all three: raw material, work in progress, and finished goods. Okay, this is the one main changes in the manufacturing account statement of financial position. Okay, here one note is there. The statement of financial position as a manufacturing account is similar to that prepared by a wholesale or retail business. There is only one differences, which is that a manufacturer may have three different inventories. That means raw material, work in progress, and finishing goods. Okay, so this is the format. Before starting any topic, first you have to learn the theory format. Then you have to start the question. Okay, otherwise you will not understand the concept. Okay, let's start the question. Here, Toya owns factory which makes dolls houses. Okay, so the factory is doll houses. They're going to manufacture, right? Manufacturing account. What is the main product we have to check? Okay, based on that, items will be there. So we have to check in that factory what product they're going to make. Here, doll house. Then when is the financial end? 31st January. Our financial end is 31st January. At 31st January 2024, our ledger account included the following balances. Here, opening inventory, the inventory they given 1st February 23, raw material, work in progress, finished goods, the amount 12,400, 16,970, 14,825. Revenue also is given. Purchase of raw material is there. Wages, okay. This wages, they splitted between three. Okay, very important this one. Wages, factory operatives is given, factory supervisor is given, sales staff. This wages, they splitted in three uh, division. Okay. So this factory operatives meaning this is direct wages. Factory supervisor, this is indirect wages. Sales staff, we have to record in the income statement. Okay. Then factory electricity is given, rent and insurance is given, general factory expenses, factory machinery cost, and depreciation also is given. Okay. And additional information. Okay. Remember, before starting any financial statement question, first you have to do all the workings separately, then later you can start the question. Okay. So here first will be the inventory they given. This inventory is closing inventory. Okay, because 31st January 2024. Then here adjustment to rates and insurance are to be apportioned two-thirds to the factory and one-third to the office given. And third one, 31st January 2024, general factory expenses of 235 are unpaid. And fourth one, factory machinery is depreciated at 25% per annum using reducing balance method. Okay, now these additional information we have to check. Okay, so I have already made the workings. First one, first adjustment related to closing inventory, it including raw material, work in progress, and finished goods. So these adjustment of inventory, accounting treatment for this inventory will be we will take in the manufacturing account, income statement, and statement of financial position. Okay, inventories. And there is big rule no in the financial statement. All the adjustment are considered twice in the financial statements. Okay, so that is first adjustment. Then we are moving to the second adjustment. Rates and insurance are to be apportioned two-third to the factory and one-third to the office. Remember, factory related items always we will take under manufacturing account. Factory. So office we have to record in the income statement. Okay, let's see how the calculation will be. Here, factory related items in that rates and insurance. Rates and insurance, what's the value? We have to check. Yes, 16,200. Okay, remember 16,200. 16,200 they said two-third to the factory, right? 16,200 times two-third means 10,800. This 10,800 we have to record under factory overhead. Then one-third to the office. Office related items, income statement. Okay, manufacturing account, we should not take this one because it's office one-third. So 5,400 we have to record in the income statement under expenses side. Okay. If they ask income statement like expenses and income, then we have to include this. Okay. If only trading section is given means no need to write this one. Okay. So next we are moving to third one. At 31st January 2024, general factory expenses of $235 were unpaid. Remember, unpaid we have different names: unpaid, owing, outstanding, due. That means we must plus it. Okay. So general factory expenses is manufacturing account. Okay, the amount 6155. Let's see general factory expenses. What is the amount they given? Yes, 6155. Okay, 6155 is there. 6,155 plus unpaid means not yet paid. We have to add it, right? So 6155 plus 235, the total value will be 6390. So this amount we have to record under factory overhead. Okay, this is factory overhead. Then fifth one, factory machinery is depreciated 25% per annum using reducing balance method. Remember, reducing balance method. Okay, reducing balance method, how you are going to do? Okay, remember, yeah, these two, it's very important item. Factory machinery cost 120,000, right? If reducing means the machinery provisions, provision for depreciation, you must minus. Okay, so already I did the workings here. 120,000 minus 52,500, you will get the answer 67,500. For that, you have to calculate 25%. Then you will get the depreciation we have to record under factory overhead. If the same question they are going to change, sorry, they are going to change straight line method. Okay, straight line method time, no need to minus this. Directly 120,000, 25% you can calculate. Okay, reducing balance method, you must minus provision. Provision for depreciation, you have to minus remaining amount, you have to calculate the percentage. Got it? Okay, now all the adjustment is over. Now we are going to start the question. Yeah, we know the format, right? Here, option A. Prepare prepare Toyash manufacturing account for the year 31st January 2024. Here, this is a manufacturing account. Okay. Yeah. Sorry. First one, opening inventory of raw material. This is the format, right? First one, 12,400. Okay. So 12,400 will be this one, 12,400. Then next format will be purchase of raw material 143,000. We have to add it. Opening raw material plus purchase of raw material we have to add 143,000. Then we will get one figure. What is the total amount? 12,400 plus 143,000. It will be 155,400. Okay. Then from that closing inventory of raw material you have to minus. See, closing inventory of raw material. Yeah, 11205. Yes. The answer, cost of raw material consumed is 144,195. Okay. This is the format. Then you will get the amount 144,195. For that you have to add direct wages. We have direct wages 51,000. See, direct wages here name, they gave factory operatives. I told you, right? See, wages, factory operatives. This 51,000 is we have to record under direct wages. Sorry. Yeah, prime cost will be 195,195 after adding the wages, direct wages. Then next step is factory overheads or indirect expenses. So we did all the adjustment, right? Those adjustment we have to write here. And make a note, we must record all the adjustment in the correct area. So sometimes the students will make mistakes in the total column. Example 10,800, like original entry. Sometimes they will miss out 1 0, but there is a working means examiner might be they will give the marks for this working. So everyone follow the workings on the same line. Okay. So rates and insurance we already did that. 10,800 we have to record over there. Generally factory expenses also we did it, the workings 6390. Then depreciation already we calculated depreciation amount. Yeah, factory machinery depreciated, that one we have to record here. The depreciation, so 16,875. Then wages of factory supervisor without adjustment. Okay, so yeah, factory supervisor 19,000. Then factory electricity they given already in the question. So without adjustment, these two, all the expenses add, you will get 69065. Then prime cost plus your total factory overhead expenses, you will get the answer 264,260. Then for that we have to add opening work in progress. See where we will get opening work in progress in the question starting itself. This one. This is the opening. Okay, 1st February 2023, 16,970. After adding, you will get 281,230 less closing work in progress. Closing already they given no, in the question itself. Closing is, yeah, 17,682. Okay, so this one you have to minus, then you will get the cost of production 263,548. Got it? So next we are moving to the section B. Prepare Toya's income statement. That means only trading section. They asked for the year ended. Then Toya's income statement, trading section for the year ended 31st January 2024. Yeah, income statement. You know the format, right? First will be revenue 390 100. Yeah, 390 100 is here. Then is there any sales return? We have to minus. Then the format less cost of sales. Opening inventory of raw material. I said no, only raw material you have to pick. Raw material 12,000. Sorry, finished goods. Opening inventory of finished goods 14,825. Yeah, this is incorrect. It should be finished goods. Raw material we will record in the manufacturing account. Okay. Opening inventory of finished goods we have to take 14,825. Then very important, cost of production. Okay, cost of production we already got 263,548. That amount please add it. The total amount will be 278,373. Then for that, please minus the closing inventory. You will get the cost of sales 264,893. So minus from the revenue, you will get the gross profit. Okay, so this is income statement trading section. Yeah, next one. The factory produced 6,936 dolls houses during the year ended 31st January 2024. Required calculate the manufacturing cost of each doll's house. Round off your answer to the nearest dollar. Okay, I already given the that formula, right? Cost of production divided by number of dolls produced. See here, number of dolls here already given 6,936. Cost of production 263,548. We got it. This answer divided by the total dolls 6,936. Then the answer will be 38 for dolls house. Okay, so 1 mark for this. Remember, your sorry, cost of production wrong means, see, it will affect first one. In manufacturing account you will lose the marks. At the same time your gross profit will be wrong, cost of sales will be wrong, and here also you are going to lose the marks. So manufacturing account, you have to be very careful while calculating all the sum insured with correct adjustment. Then only you will get full marks. Okay, so next we are moving to the last section D. Either a competitor of Toyota's has decided to cease trading. He has offered to sell his inventory of finished goods to Toya at discounted price in return for immediate payment in cash. The total price of these items is 9,000. The total price of these items is $9,600. Toya has only $1,415 cash at the bank. Now advise Toya whether or not she should buy Idris inventory. Justify your answer by providing 2 points for and 2 points against buying his inventory. Okay, here Idir is a competitor of Toyas. Okay, so has decided to cease trading. He has offered, okay, uh, sell his inventory of finished good to Toya. Okay, Toya is the trader, no? Yeah, manufacturer. So for buying the inventory, what is the advantages? Since the goods are discounted, Toya can sell them and make extra profit. That is the first point, right? More profit means good for the business. That is the first important point. Okay, remember, While writing evaluation, first you have to note it down some important points. After reading, you have to understand the question well, then make a point, then write like a paragraph. That's the good option for evaluation. Then second one, extra inventory means more goods to sell, which could increase total sales and attract more customer. That's true, right? Yeah. If we get more inventory, we can sell more goods and total sales will be increased and the customer attracted, right? So these two important points for Toyas, whether or not she should buy inventory, providing 2 points and 2 points against buying this. This is for buying. If we buy, these are the important advantages. Okay. Then against buying the inventory, what are the against point? Against, she doesn't have enough money to pay $9,600. She only has $1415, 1415, right? Yeah, she's having only 1415. So she may need to borrow, which means interest cost, right? Sometime she has to buy, she has to take loan from bank like overdraft or something else, or from friends and relatives. Okay, so that is a risk, right? Interest she has to pay. And second, there is also risk if the goods are low quality or unpopular. There is also big concern, and she won't be able to sell them, and that would be a loss. Correct? So that is against some buying of inventory. Then conclusion is very, very important. So Toya should be careful if she can arrange finance and confirm that the goods of good quality and can be sold. It might be worth buying, otherwise it's risky. Okay, so this is important conclusion. All the questions, if evaluation is there, means you must write conclusion. While writing conclusion, please add as per my view or according to me. Toya should be careful if she can arrange finance and confirm. Okay, like that you have to start and end with the good points. Then only you can score full marks. Okay, I hope you guys understood this manufacturing account question. Due to health issue, my sound is little slow down. Okay, so next video I will upload soon. Okay, I got positive feedback from our students and friends. Okay, I'm going forward. I will explain little detail to the third question. Okay, so thank you so much for listening and viewing my videos. Thank you.